All right, everything looking good. We are live. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Oh, sorry. It is 8 p.m. Eastern Standard Time on September 11th, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So we had our little pop going into the weekend. I saw a bit of continuation on Bitcoin and some other various cryptos as well. We're going to break down that move, where it's likely headed. We're going to talk about, obviously, the beginning of a potential trend shift and, what the next steps are. We'll talk about our traditional markets, the DXY, and we've got some, probably do pot stocks, commodities, etc. So I'll take a look at it all and get rolling. If somebody could let me know in the chat everything is coming through loud and clear, I would greatly appreciate it. But in the meantime, let's go ahead and jump right in. So TNX actually finished really strong. So we do have the sell-by-sell divergence signal. We're inside the bullish control zone still, so the bulls are still in control. We close at the highs of the day, and overall, pretty strong weekly close as well. We're just off of the highs, so it looks like this is still bullish. So we know as long as TNX is still strong and bullish, the likelihood of any big sustained sticky rallies in pretty much any risk on equities are unlikely. Now, it's possible if the dollar continues to have some weakness, short or long term, we could see still some commodities rallying based on, the fact that they're priced in dollars. So we'll see what happens. We'll focus a little bit on some different things, some overhead areas that we have to look out for, as well as, key areas that we pull back for support as well. So with TNX, on the weekly here, we basically had our strongest weekly close yet. We closed a slightly higher high than that previous rejection. We had a pretty clear shooting star right here, a long tail rejection and a red candle, and that followed by pullback down to the weekly 21, and then we started rallying again, and now that last weekly close is a new cycle high. So as long as we're making new highs, we would just assume we're going to continue making new highs as well. And again, this looks like a pretty big bullish reset right here. We basically saw the Stochs come all the way back down to the bottom of the range. Price action barely came down at all, and now it's ready to rip to the upside as the Stochs are aggressively postured to have a bull cross here very shortly. And obviously we see a bunch of red histograms on the TDMACD, and then we see some green histograms, and we have reclaimed the blue slope line. Now it is still possible to reclaim it, and then it rolls back over and gets rejected. That would obviously be a strong rejection, and we would take that very seriously. But for now, it looks like we've just reclaimed the slope line. And, the same way this was essentially a rejection, we back tested it and got rejected ahead of time. Sometimes you'll cross over, it'll look bullish and then get rejected. But for now, it looks strong. It looks ready to rally. We obviously have the 200 exponential crossing over the 200 simple. They're both blue. Everything is very, very bullish as far as I'm concerned on the weekly. And if we just go back in time and look at the levels we're threatening currently, we're basically back at levels we haven't been at since 2011. So, I mean, that's a pretty big deal, obviously. 2011 yields. And, we know, obviously, the next big target is up here at like 5%, which was the peak from like 06. And if we look back on that, that was sort of like the norm back in 2002. So it will have been, almost 20 years. When we hit 5%, if we hit 5%, or even if we don't, and we're looking at 2011, it's important to understand, obviously we're in 2022. If 2011 was the last time rates were this high, valuations have come a long, long way. Money supply has obviously expanded. So there's a lot of big factors to be involved here. But if we haven't seen tight conditions like this since 2011, I think it's realistic to think that, we might not see those same equity highs that we saw in 2019, 20, 21, depending on what asset we're looking at. Some even 22, just because if money is tighter, if it's, more difficult or more expensive to borrow, we likely don't see the valuation levels stick like they were when we had the, extreme loose conditions. Now the question is, okay, is everything already priced in and that's done? So even if this does move to 5%, equities won't respond to the downside because it's all already priced in? I don't think so. I don't think anyone is pricing in 5% right now on the Fed funds rate, on the 10-year, the 2-year, whatever. And, technically speaking, that's where we're going. Now, there is always a possibility that we get rejected right here. It rolls over and this, this candle closes down. We still have 3 weeks left in this month, obviously. Could get rejected right here, come back down, end up getting rejected and just trending back down towards zero for another couple years or whatever. That's always a possibility. But right now, in my opinion, this is the area we need to look out for, that 5.2 level right here. And if we do break out of that, that's breaking out of our long-term downtrend. We'll have crossed the 200 exponential and simple blue again. It's very, very hard to not be extremely, extremely bullish on yields going into the future, which tells us, well, what about bonds? You already know. And the bond market is massive. They're two of the biggest markets in the world are the U.S. bond market and Chinese housing market. So we obviously know there's a bunch of trouble in the Chinese housing market. So if we throw on top of that U.S. bond market issues, which seem very, very likely, we did a little deep dive into some, reasons why bonds would crash. And, the time value of money, essentially, and being stuck in a bond for a long duration with much lower yields than what you could get on a bond right now. And that causes all kinds of issues. It basically traps money for the duration because nobody wants to sell their bond at an extreme discount, lose money on it so that they can switch into a high yielding bond. So there's a lot of things telling us that the likelihood of seeing any sticky rallies or maintain like longer term bull runs are not that likely. Now that can change, and we're actually going to talk about that in crypto, because sometimes even though we think something's going to happen, or it looks like something's going to happen, or the fundamentals or technicals are telling us something's going to happen, we have to trust the indicators and our, nature of trading, keep it as mechanical as possible when we do see bullish signs. And, we're going to talk about those in crypto here very shortly. So 210, we talked about this quite a bit lately. Obviously, the 2-year is still just skyrocketing to this, just out of control right here. The key thing we watch out for, obviously, is not when the actual yield curve inverts the first time. It can chop around, it can invert, it can uninvert like it did back here a bunch of times in 2007. That's not what we're looking for. What we're looking for is when this trend rolls back over. And it's difficult to see because there's a lot going on right now. But if we just hide a couple of these and we just look at the actual trend line, this is just the TJD master right now is all you're seeing. This is all just the master. And then it's on the 2-year. Now you could have it on the 10-year, whatever you want to do. You could look at different ones in comparison, but everything is turned off right now. This would be if you just turned on your US 02Y, which is the 2-year yield. If you put that on your chart and then turned it off and just kept the master up, this is what you see right now. So we can see very clearly when the master is green, especially when it's above the 200s and they're blue, that tells us essentially that's a very powerful uptrend. So that's what we're in right now. We're in a very powerful uptrend. And the 200 exponential has just now crossed above the 200 simple. And because it was such an aggressive rebound right here, that's the beginning of a trend, basically, is what that's telling us on our weekly. This is a weekly chart. So, here we saw basically the 200 exponential crosses above the 200 simple. And then, everything's postured correctly. And then here we flip both bullish. And then we get a decent amount of continuation. Now, it lasts from May of 2005 until July of 2006. Kind of do like a lower high double top in July of 2007. So we're talking about a couple years. We're talking about a couple years from when this started to when it actually rolled over. Here, the 200 lost momentum down here at the lows. So this is what we always talk about, where the 200 exponential and the 200 simple cross and they're postured incorrectly. Oftentimes we see one more push. So this pink one is the 200 simple. So here the 200 simple cross above the 200 exponential. So it tells us the trend is running out of energy. Obviously, it's going to the downside. So the downside trend is running out of energy. We almost always put in, well, I shouldn't say almost always. there's a very high probability of still putting in a new low after that cross takes place. But oftentimes we see afterwards clear bottoming signals, which we obviously see right here with this double bottom back in 2012, 2013. And then again, when we cross up above the 200 simple, we cross above the 200 exponential, they're already postured correctly. The 200 exponential is already on top because of that loss in momentum. And so once it's already lined up, as soon as we get above it and they both flip blue, that's the beginning of the uptrend, very powerful uptrend. And that's a clear signal. Just, we don't have to look at anything else. We can just look at the momentum of this indicator, and it gives us a clear picture. So, when we turn on the price action, we're like, oh, okay, sometimes price could be confusing. Instead of taking a million different things and trying to look at everything from every angle and overcomplicating it and just, getting in our own heads, let's take everything off and just keep it super simple. When we cross above right here, and these are both flip blue, that's in January of 2015. So until we top out right here, or until we cross back down, however you want to look at it, that's September 2019. So we're talking about almost 5 years. Almost 5 years this trend lasted for. So here we had like 2 or 3 years. Here we have like 5 years. The time before that was this chop back in here. So if this is just now having the bull cross, they're just now both flip blue. Everything's just now bullish on the treasury yields. And again, this is the 2-year technically we're looking at. I mean, what does that tell you? It tells you that there's, it's the beginning of the trend. We could likely see rates go higher and stay higher, maybe even continue going higher for like 3 to 5 years. It's not crazy to think that. I mean, we made it all the way down to zero in a 30-something year downtrend. So, for me, it's not crazy to think that, maybe we spend 3 years or 5 years or something crazy, in a crazy uptrend and go up to 5% or 7% or 9%. We talked about there's reasons there's sticky inflation that, is not being accounted for. So, if that inflation ends up coming back and stays sticky, all the inflation that they're fighting might be great and everything. But, if there's a bunch of other inflation too on top of that, it might make the fight a little more difficult. And then on top of that, if you have a bunch of, poor fiscal responsibility, I mean, it's not crazy to think we could see a lot of inflation for a long time. That sucks for a lot of people. I mean, it sucks for everybody, but obviously, in the words of Jerome Powell, the poor people have to shoulder the burden. I don't think he says poor people, but that's what he means. The less fortunate. That's his term, less fortunate. No fault of the Fed by any means. So, I mean, when I look at this chart, I don't want to get overly biased by one thing or two things or whatever, but I just don't see any sustained, legitimate rallies, especially not like new highs or anything in any of these markets. So let's look at oil here. So oil obviously has been putting in a topping pattern for some time. We're now in this basically descending channel inside of our other little stuff going on here. There's quite a bit going on. We did take out the low right here. So this is an important level because we broke down from the low, after hitting the 236 and almost the 382, broke down below it, and then we're back testing it right now. So this fib isn't really useful anymore now. You could either move it back down here and just start looking for it to backtest that 236, or just pay attention to that key level as like support and resistance. But there is quite a bit of confluence there with the bottom of the descending channel and everything. I'm just going to go ahead and get rid of it for now, and then when it's appropriate, we'll worry about that. But the most important thing right now, we still have some targets slightly to the downside here. This is starting to look like a pretty clear initial rejection of the 200 exponential and simple. We failed to cross them back up. The 200 simple still has a blue slope for now, but it's pretty flat, so it's very likely going to be rolling over. The real question is, are we going to get another leg down, which seems likely, and then a reversion of the mean backtest up to like 97-ish, 96-ish, and then that will be the final rejection before we roll over? Are we going to try to backtest it again? Doesn't seem likely since we just had a backtest. So for me, it looks like we're going to go sideways to down, and then eventually we should get a pop back up to like 95 or 96. But I do expect that to get rejected, and that to just be the beginning of, we don't have to call it a bear market. It's the beginning of a downtrend, and all the downtrend is, likely is just a daily correction after this epic bull run in oil. So, I mean, it's been going nuts since September of 2020. That was a massive uptrend. I mean, again, people always like complicate everything. Just keep it super simple. All we care about is, are the 200s blue and slope to the upside? I mean, so this was your run up here. Now, if you wanted to trade a little bit inside of it, you'd either be, potentially exiting and re-entering, or potentially just buying the dip, adding to your position on the way up here at key levels. But I mean, it's very, very clear this was a massive bull run. And, before that was a pretty bad bear run and a little consolidation. And it looks like we're getting ready to do it again. Looks like we're getting ready for a little bear run consolidation. Now, we'll see what happens, how deep it goes. You guys know, obviously, where my targets are. We look at the longer time frames, and we have some pretty key levels plotted out. Now, does it get down to the 60s? It's possible. It's one of our targets, but, 70s seems much more likely. Well, at this point in time, it's barely hanging on to the 80s, so. So what's going on, CN? Appreciate that, brother. Crypto Galt, good to see you. Good day from down under. Hey, good to see you, man, from the US of A. Or not, maybe not see you, but, All right, so we got the Dow. So we had that, obviously, back test of a 200 exponential and simple. Nice move up right here. Market was pretty beat up. Came back down. Now we're trying to get back up here and do it again. So we talked about the levels. We could get back as high as 330. We could get back as high as 335. We could already have topped back out. This does not change how I look at the market by any means. And as far as the weekly, I mean, I think this spells it out pretty clearly what's going on here. Now, we'll talk about a potential bull case and a bear case. Now, it's hard for me to be bullish right here because we just got rejected. But we could potentially put in a lower high now and move to the upside. So there is some hope here. Obviously, the close down here on the weekly at 313 and then the open back here and then push up. That was definitely a big push right there. What does it really mean, though? It doesn't mean a lot to me because we just had a really good chance to cross 821 back to the upside on the daily and then fail. So it doesn't seem that likely that we would just get rejected and then immediately push back up and succeed, but it's definitely a possibility. So the most important thing right now is this higher low. As long as we have that higher low and we continue moving to the upside, that's great. If we take out this higher low, we have to assume we're coming back down here to retest the 200 exponential and simple. That's how I look at it. So that's what I'm paying attention to. Obviously, getting above like 325 is a big deal because we just stay up above there long enough. We can get the bull across. And, in this case, for the Dow on the weekly, it's still above the 200 exponential and simple. So if we do get the bull cross confirmed, I mean, I'm bullish, regardless of how I feel or what I think is going to happen or anything. I'm bullish again until, we see otherwise. But, a lot has to happen for that to change. And same with the daily here. It looks like the beginning of the bear trend. But, again, if we hold this lower high, or higher low rather, move back up here again, put in a new high, I mean, it's going to look pretty good. It's going to look pretty good. But not quite there yet. So, what's that, daily? Yeah, okay. SPY, and then obviously we look at the monthly too. I should touch on this. I mean, we still have plenty of time on the monthly to see what happens, but the most important thing to do for the monthly is to just get back above like 327 so we don't get the bear cross on the monthly. And then on some of the weaker indexes or just stocks in general, it's the difference between regaining the bull cross basically or like invalidating the bear cross. So SPY looks exactly the same. I mean, there's like not really a lot we could say right here. Looks like it's trying to do the exact same thing, higher low, trying to build momentum back to the upside. It's going to be really hard to rally into the Fed meeting with a, likely 75 basis point hike coming, but for whatever reason, markets don't seem to care. I think a lot of it has to do with every time the Fed says something hawkish, they like come back out afterwards and sort of like pad it. And I think what people don't understand is if the Fed want to crash the markets, jawboning, they could. If the Fed doesn't want to crash the markets and jawbone, they can. So in my opinion, if the Fed is able to tighten monetary conditions and somehow jawbone or just pad it enough that along the way the stock market doesn't crash, I'd say they're doing a fantastic job. They don't want to crash the stock market. They want to tighten up conditions and get rid of the inflation. But it's very, very hard to not crash the stock market when you're doing what the Fed's doing. So that's what the soft landing is. And to tell you the truth, the longer the market hangs on and the Fed is like doing its thing, I think the better job the Fed is doing. Now, obviously the Fed sucks and it's garbage and I wish it didn't exist, but Aside from that, I would say if they manage to not crash the markets and tighten economic conditions, I mean, they're doing a great job. Everybody's super frustrated because they're like, oh, why are the markets still going up when the Fed's doing all this and it doesn't make sense and manipulation. I mean, but it's really not. I mean, it's the markets thinking that they're understanding what the Fed is saying when the Fed is saying one thing and then kind of like the little wink at the end, like you know what I really mean though. Enough to trick the markets every time. I mean, and it's working. So I think they're doing a great job, for the worst people at their job on earth. So SPY on the weekly, I mean, same thing, back testing 200 exponential, or I'm sorry, the 8 and 21. Closing back above that's a big deal. If we can get back up to like that 410 mark, that is definitely a big deal. Looking over at the weekly, same exact thing, close to the 821 cross. Don't want to go. I mean, if we go any higher, we could potentially avert the cross and see a situation like this where we just keep ripping to the upside. Looks very, very toppy here on our monthly indicators though, and it seems like we're going to get that 821 bear cross one way or the other, even if it's delayed a little bit, but we'll see. The Qs, NASDAQ, basically same back test, rolling over, higher low. I mean, it's the same thing. Same with the Russell as well. As long as we have the higher lows, that's the most important thing right now. We're at the bottom of the range. It looks like they're going to try to rally back up here again. We'll look out for some divergence, but it looks good to me. We actually see a little bit of bullish divergence with the lower low on the stochastics here over that one and a much higher low on price action. And then we see the same thing again. Oh no, I'm sorry, we don't here. We only see it on the stochastics. So semiconductors, again, all these charts really look the same. I'm not even going to do a bunch of like super in-depth looks at everything looks exactly the same. We did that breakdown when we looked at like all the major indices and then we looked at like the sectors and it was like this one is the best, this one is the worst, and they all just look kind of something in between, but they're just so correlated at this point in time, it's crazy. So DXY, so obviously people are getting like super bearish on the DXY. They always try to call the tops on everything. We had identified some bearish divergence. We've talked about some potential, for a topping situation to happen, but we're nowhere near being able to call a top. I mean, unless you call this a top and that a top, we're nowhere near calling a top right now. So we've got to wait, got to see what the DXY does. We know as long as we see weakness in the DXY, that's good for equities. So we saw decent low rallies. But at any point in time, DXY can just continue strengthening. Now we got the hard sell signal. We left the bullish control zone. We have a bunch of red histograms. We typically get a bounce off of the slope line, even if it's going to end up rolling back over and failing. We hit the 21 and back tested that previous high, which is what we were talking about, what we were expecting the last time. I mean, this is what a constructive structure looks like in a market. I know people aren't used to that because they're used to just meme stocks. But here we put up a high and then a low, and then we put in another high, and we come back down, and we consolidate around the previous area of price action taking place, find support there, and then we move to a new high, and then we pull back, and we retest those previous highs and build support on them. And, this is how you build price action in a market. So it's important when you have these pullbacks that you hold support. So this is the key area we'll be watching. If we lose this area of support, then it starts looking much more, ominous, as then we start retesting potentially back to like 100, and that's a big move in currencies. That can make a big rally in commodities, a big rally in potentially like foreign markets as well, obviously, as the DXY would be weakening. So there's potential there, but it's just so early, and everyone is betting on a dollar top right now. I mean, we'll see what happens. I'm the one guy who's not betting that the dollar has topped and that's it, and it's just going to go straight to zero now. Everybody else can bet on it. We'll see what happens. But typically when everybody's on one side of a bus, we know how that works out. So there's definitely some potential to come back here on the weekly to like 108, 107, 97. That is also the 8. We're so far away from the weekly coming down here to even touch the 21, which is only done once on the back test when it, basically when it crossed the 821 bullish right here. We got like super bullish back in June of 2021. Obviously we had the double bottom, everything just pointing to bullish on the dollar while everybody else was bearish. Obviously here we see the 821 cross to the upside. We back tested 21 a couple times, along the way. And then we haven't even touched the 21, the whole rest of this rally up. So the last thing I'm going to do is get bearish at the 8 at the back test here at like 108. If we were not even touching the 21. Now, if we get down to the 21, 105.71 or something like that, then we'll start talking about, that's a key level, obviously, that previous pullback. And then the 21 would be somewhere around there if we just melted down suddenly. But that would still look to me like a massive buying opportunity, or like, very, very strong bull trend until we broke down from that level, at which point in time, then I would look for the 821 cross, the back test, the pullback, all the way potentially back down to like the 97 range. So when I talk about how bullish I am on the dollar and say like, our next target's like potentially 114 or 120, we don't have to reach those targets. And if you ask me what my bearish target on the dollar is, if we did just roll over or whatever, we have targets all the way down here, close to 100. And then backtest of the 200 exponential and simple is definitely possible at the beginning of a massive bull trend. So it's not crazy to think we come all the way back down to like 100 and then rally to new highs. And how that would look in the markets, how crazy that would, if the dollar suddenly reversed right here, even if it went higher later, I mean, it would cause craziness in the markets. All kinds of just awesome volatility, so much opportunity. But I just wouldn't be betting on that right now. I mean, there's just not enough signs from the DXY that is topping. And if people are going to get excited about this little doji right now, I mean, remember what they were saying about this one. Oh, shooting star, it's over. Dollar's going to zero. That's the top. This is a topping candle. Look at that rejection. Oh, it's disgusting. Get ready for the gold rally. Get ready for America to go out of business. Whatever people say, all this stupid stuff. It's usually, no offense to anyone, obviously, by where you live, but it's almost always like someone from Britain or Canada, it seems like, preaching about how bad the dollar is and how it's going to zero. I don't know what's going on with them, but it always cracks me up. I'm like, why don't you tell us about what you understand about your own central bank, about your own currency? Tell us what's going wrong with the British pound right now. It always cracks me up. Everybody's like super critical. But I mean, pull back to 100 definitely seems like a possibility. The monthly is still very, very strong. Very strong. I mean, we'll see what this looks like. But if you just start calling every single candle individually the top, you're going to get just ripped. Because that was, if they were saying that was the top and shorting the dollar, that was at 105 and then it ran up to like 110. So probably just got wrecked. But I think most of these people just talk. They don't actually like trade or invest. So Apple came all the way back down to 200 exponential. I think it's possible it comes back up and retests the 200 simple, like 161. We see quite a bit of weakness in Apple in comparison. Now, it's been very, very strong, marched up here to the top of the range, had a pretty hefty pullback. And now we notice it's not really doing a lot as where some of the other stocks have been moving. I think that's just part of the limited amount of money in the market, moving certain stuff. Apple is really strong. People take some profits out of Apple. They move it into some other smaller cap items or stocks or equities. And then they rally with much less money. So we can see essentially that rally broaden out. And that's all I'm seeing. We backtest a lot of support. We got pretty far down here. It's only just the beginning of the red flipping. But here we see, this was our pretty hefty pullback right here. And then while the red was still, the slope was still red. And, obviously we were pretty powerfully angled to the downside. We had a nice little rally back up here and put in that initial lower high. We then went lower and then came all the way back up higher than that one. So, I mean, it's not crazy to think that we could literally continue trading in this massive range on Apple and a lot of these other things for quite some time. So, the way I look at it is I'm going to sell resistance, which obviously we discussed that in advance. And then I'm going to buy support and just assume it's going to just trade inside this descending broadening wedge. And then eventually when the breakout happens, it's going to be massive. But, I mean, we don't know. Is it going to be bullish or bearish? There's still a lot of development to take place. So Tesla had a nice little rally off the 200 exponential, back up around $300 after the split. Again, staying pretty bullish in comparison to most things. Is a much better chart than most things have right now. Microsoft, much, much weaker. Came all the way back down near the lows right here. Trying to move back to the upside now. But again, very, very weak. Google, even weaker than that. So here we see a lot of these big stocks that have basically moved the market to the upside and, been behind the strength in many of the indices, and then also just the massive rally we saw, they're all like underperforming right now. Now, not compared to like Cathie Wood stocks, but they're not really doing anything lately. And then we're seeing a lot of like the trash, the meme stocks, the cryptos having like a little more of a rally as of late. So in my opinion, it looks to me like the broadening that people do when you have a little bit of a bull run. You take profits out of your big stuff like Bitcoin, and then you put it into some shit coins, and then they rally up, and then eventually you take the profits back out of them and then put them back into the big things. So I think if we start seeing these big names rally again, there's a possibility we legitimately have, seen the bottom, and that's it, and we're going to just go up from here. But until I see the big names rallying, it's hard for me to get behind that. Nvidia just put in a new low. So we talked about this trade setup here, basically just taking the same trade setup again, which would be an entry around like 138, and then about a 26% move back up to back test the slope that we broke down from. And this is a long trend line. It's not super accurate. We talked about the various ways it could be drawn. Maybe it should be drawn more like that. So possibly we underperform on this. It doesn't really matter, honestly. It's the idea of the trade is what we're paying attention to, which is basically a back test of the 618, back test at the top of the channel, all these various levels. So we'll pay attention to that. Looks good. Obviously, I'm still very bearish on these markets in the meantime until they prove otherwise. But it doesn't mean we can't counter trade them if we understand the risk and, take advantage of the opportunities. There are just less of them. As we're in a bull market, you just literally buy anything. The old monkey dartboard. So Amazon had a nice rally up here, back tested the 200 exponential and simple, came back, filled the gap. That was obviously very important. Chopping around in this range. There's not been a lot of price action in this range because there was a gap here, and then that was like support previously. So, it makes sense that it's kind of trapped in this region trying to figure, do we go higher above the 200s or do we break back down and start retesting the lows? Obviously, we don't know right now. Momentum's starting to pick back up. Looks like it wants to make another run up here. So we will be watching out for divergence. There's a lot of divergence in these markets right now. And, that oftentimes presents the best opportunities. Meta still looks like trash, just hanging out at the bottom of the range. Looks like it's getting ready to go straight to zero. Twitter had a nice little bump back up. It's trying to get back above the 200 exponential and simple. There's an argument to be made that actually, the market believes that Elon Musk is going to be paying full price for Twitter, and it's going to rally up here to like the mid 50s or whatever. Definitely a possibility. We shall see. It's putting in higher lows for now. We talked about that potential scalp trade setup, but it hasn't made it down to our entry yet, and I'm not going to chase that one, obviously. All right, so let's take a look at some cryptos. Let me take like 2 seconds. All right. CN says, I agree. A ton of divs. Yeah, tons of divergence, dude. Speaking of divergence, let's look at Bitcoin. So this is a Bitcoin futures chart right here. So we're going to look at both, but I want to pay attention to futures because oftentimes along the way, the whole bull run up and then obviously the bear market we've been in for some time now, we have noticed quite a few divergences taking place at key times between what CME was telling us and what Spot was telling us. So whenever we see the two agree, it's very, very reliable, whatever they're telling us. But when we see one saying something and the other saying something else, oftentimes, that it has signaled to us a move was about to take place unexpectedly. And we've been able to capitalize on that very nicely, obviously. And we're starting to see a little bit of that right now. So we're not just looking for the divergence within an asset class or across assets, but also divergence between what futures is doing and what spot is doing. So obviously the futures chart, we have our low right here. We did put in a daily lower close on the futures chart. So oftentimes you put in, a slightly lower low, take out some stop losses right here, and then you'll see a nice move off of that low. We call that the spring. Now, it makes sense that we would just come back and test some resistance. So the previous resistance was 24,370. Obviously, that's the area we've been talking about. We see here on price action, the stochastics, we basically double bottomed perfectly on them. Price action, we essentially double bottomed perfectly. So you could argue there's slight divergence there because this one's slightly lower. I would just say that there's no divergence, and it's not worth, splitting hairs over, I think is the term. Here on the TDMACD, though, we see a substantially higher low on the TDMACD, and this is on the daily. We had already pointed out previously, I mean, at this point in time, it's like a month ago, the low down here, we have a low, and then we have the lower low in price action. We have the low here and lower low in price action, and then we have the higher low now here, but still that same low. So that gives us our first bullish divergence on the daily, on the futures chart. And then, what was I saying? Wasn't there previously drive? Maybe it's on spot chart. I can't remember. I was thinking there was a divergence between those points, but not on the... Oh, yeah, it is. I'm sorry. So here's the low, and then this one is not quite as low. So this is a higher low on the histogram, but it's a lower low on price action. So again, that's basically like 3 drives of bullish divergence. Oh, which obviously is important. We have a low, then a lower low, then either a same low or a lower low again, however you want to look at it. And here we have a low, then we have a slightly higher low. It's so weird because when I don't zoom in on it, it actually looks like they're like the same, but this one is definitely higher. Or even this one looks, it's like, I guess, an optical illusion, but it's a low, a higher low, and then a third higher low. So again, triple bullish divergence. The last couple times we have seen triple bullish divergence. That was the bottom right here, triple bullish divergence. There was triple bearish divergence at the top. There was bearish divergence here. There was bullish divergence here. So the fact that we have triple bullish divergence right here, for me, it's a big deal. It's worth paying attention to. Now, we talked about what needs to happen for us to get completely bullish on the market. It's not just a switch, one or the other. It's steps, and we look at like the 10 steps on the different indicators, etc. Well, we know one of those steps is the 821 bull cross. So obviously we're still well under the 200 exponential and simple. We're still very bearish on these markets overall. But before we can ever get back up here to backtest the 200 exponential and simple, the first step is we have to cross the 821 bullish. So we're well on the way to do that now. So the key area to watch is like 20,900, 21,000. That we want to see that hold on a daily for like a few days, like preferably this whole week, and we should get the cross on the futures chart. Big deal. Hard buy signal, coming out of the bullish, bearish control zone rather. Last time we saw, week after week of price action, nice continuation. And even after we got that hard buy signal, we got rejected, but we put in a higher low. So even if we do get rejected here and we come back down, we're looking for just a higher low. Maybe we don't and it continues. So I think it's wise, in my opinion, to have a small position, in the meantime. And then when it comes back down, potentially add to that position. And if it invalidates by putting in a new low, pull the ripcord and get out of there. But if we see that continuation, we could see some powerful continuation. Key level to watch would be that 24K. And then after that, we have a lot of resistance around like 28, 29. But then we start getting up into like the low 30s. And that's the backtest of 200 exponential and simple. So the first step to building a bull case is the 821 on the daily happening. We'll talk about the spot market and go to the 4 hour and all that. But then the next step after that, for this indicator at least, is to get above the 200 exponential and simple. So if that's the likely move that's going to happen is the test before we find out, is it going to happen or not? The first thing we have to do before we can cross them blue is test them. So, we're looking at a 44 to 57% move in Bitcoin if we test them, which in my opinion seems likely, especially with triple bullish divergence down here telling us, hey, this selling is getting exhausted. Doesn't mean the trend is over. Doesn't mean we don't put in lower lows, but Bitcoin is telling us we're going to rally. Now, fundamentally, it makes no sense. Bitcoin's a risk on asset. We're about to get higher rates, you know, all kind of tightening. Bitcoin has always done well during QE, but now we're going into like the most serious QT. So why would Bitcoin be rallying? I mean, I don't know. There's going to be some kind of, I'm sure, fundamental story that comes out. Sam Bankman-Fried clones himself, and then the clone clones himself, and then now Sam Bankman-Fried is able to like buy up extra assets or exchanges or bail people out or whatever. I mean, I don't know what it's going to be. I'm not even sure if it's bullish if Sam Bankman-Fried clones himself. But hypothetically, let's just say that's the thing. You know, everybody's going to come up with reasons why it's happening, but we know the real reason it's happening. Triple bullish divergence in a downtrend that's, you know, starting to see some exhaustion. Now, is it possible that all of this is invalidated, just rolls over immediately and just gets cut in half, goes to 10K? Definitely a possibility. We are still very, very much in a bear trend, in a bear market, the whole deal. But, you know, we can't live our lives in fear, obviously. So it's a slightly higher low on the weekly future chart, which is good. I mean, we definitely put in a lower low on the wick and on the daily, but not on the weekly. So again, these things are not agreeing. And we'll see when we get to the spot market. So here we have the hard buy. We left the bearish control zone, and then we actually re-entered it right here, and then we left it again. So technically, the momentum is in favor of the bulls. So it looks like we want to backtest the 200s now at about 23.5. So again, we're looking at that 24 level is very important. A bunch of green histograms. We're approaching the slope line. We're still below it. It's still red. We're still below zero. So pretty bearish here on the weekly. I mean, look, let's be real. The most important thing for Bitcoin to do, if you, let's say you're Sam Bankman-Fried, or you are Michael Saylor, or you are CZ Binance, or any of these other big players in the space, you know, you own Coinbase or one of these trash crypto projects like Cardano or something like that, okay? It's in your best interest to get together with all the other important crypto bros, okay, and do whatever kind of circle jerk needs to take place that you stop Bitcoin from breaking it down any further, especially the weekly cross happening and going into a weekly bear trend. It is really fucking important to do that. So I would imagine all these crypto bros go meet up in the metaverse or whatever and, you know, get together and figure out how they're going to bail out this crypto market, because it's in all their best interests. You know, people always talk about how the America's going to fail, or, you know, the banking industry is going to fail, or all this stuff. And it never happens, obviously, because it's in the vested interest of the powerful people to stop that from happening, because they own all the stuff, or they have all the power, or whatever. So right now, all the crypto bros need to get together and do whatever it takes. You know, we're not going to judge you. We'll look the other way while you do some questionable stuff. I mean, it's crypto, so we expect it. But the truth is, I mean, it's in their best interest. They own, you know, whatever, 90% of the crypto, 95% of the crypto value or whatever is held by a handful of people. So it's in their best interest to stop this from fucking happening. Now, are they going to be able to do it? I mean, I don't know, but they should make a pretty big effort, I would imagine. So not crazy to think we're going to be back up here at 24K pretty soon. And, you know, as far as futures is concerned, we have a low, we have a higher, we have a, no, I'm sorry. We have a low, we have a high, we have a higher low. So putting in a higher high right here is a good thing. Now, granted, it just looks exactly like the consolidation we had right here before we legged down again. So does Bitcoin still go to zero? Probably. But, you know, it's worth paying attention to. That's what should happen. That's what I would do if I was, you know, Bitcoin daddy or whatever, whoever's in charge. On the monthly, I mean, it looks horrendous, obviously. I don't have to tell you that. 821 monthly cross, meltdown, bears in control, all red histograms. Everything just looks disgusting. The only thing that would make this chart look better, well, there's a lot actually that make it look better, but one thing that would make it look actually better is if this was around long enough that there was a 200 monthly moving average, because at least we'd still be above that and it would be blue slope. All right, so we talked about all that stuff. We identified all those key important things. We're breaking it down super simple, but now we need to look at the spot market. and compare it. So we're going to work our way up from the 4 hour. So obviously I've been talking about it forever. It's no surprise. Here I was talking about the main thing we needed to see was the 821 bull cross. Every time it got rejected or failed, we had a leg down. We identified in the group actually this cup and handle pattern right here. It played out beautifully. The measure move to the upside was basically this first candle right there, at which point in time, you know, it looked very clearly like a bottom. We had crossed the 4 hour 821 to the upside in line with the cup and handle. So again, you know, everything looking great. We get the hard buy signal. We leave the bearish control zone. Stoch's angled to the upside powerfully. All green histograms. We cross the slope line. We flip the slope line over blue. Boom, we get our nut. Okay. So our next target obviously was the back test of the 200 exponential and simple. Think about this right here and what we were just talking about on the daily. Just picture this scenario. We're melting down. We're in a clear bear trend. We just keep going lower. We put in a new low. And then finally we cross the 821 to the upside. And then the next thing we do is we back test the 200 exponential and simple. We cross the 200 exponential blue. We're above the 200 simple now. It's almost flat. We're trying to cross that blue. That's a very important step in the process of moving back to the upside. Now, could this just get rejected and go straight to zero? Of course it could. We have a hard sell signal. We're still in the bullish control zone for now. So, you know, if we leave the bullish control zone here, that's our signal like, hey, we got to see where this goes. We should de-risk. But right now on the 4 hour chart, this is pretty neutral. Which is good because it was really, really bearish not long ago. So the 4 hour chart starting to look good. Now it looks like short term, we're going to see some downward pressure, but we would expect that to be a higher low. Hold on to these key support levels. So now look at what we just looked at for the Bitcoin 4 hour and just pretend this is, you know, the same chart basically. I mean, the difference is this back test right here. Let me just look at it real quick. You know, this time when we break below the 200 exponential and simple right here, here the 200 simple is on top. Here we break down, we back test, it's a weak back test, and then we just keep putting in lower lows. Eventually the 821 crosses, and we back test the 200 exponential and simple. Now just picture that exact scenario playing out on the daily chart. We break down below, 200 simple crosses above, we back test, we get rejected. It was much weaker on that 4 hour chart. Obviously we didn't get anywhere close to the 200s. Lower, lower, and then what happens? We start to build momentum, it rolls over, and then here we cross it again. So now on the daily Bitcoin spot chart, we've got the cross. Now it hasn't happened yet on futures, so we have to take it with a grain of salt. But we see a bunch of green histograms. We cross the zero line, we cross the slope line, hard buy coming out of the bearish control zone. 821 have a bull cross right here. I mean, the most likely path, in my opinion, that Bitcoin takes right now is a back test of the cross at the 821, and then assuming that holds, which I think it likely does, which is around that like 20,800, call it 20,500 to 21,000. That's the key area we want to see. 20,500 to 21,000. We want to see that hold. That to me is a buying opportunity. Now we're still in a bear market. We're still in a bear trend. We're still well below. But for me, it's at least enough of a scalp that is worth a move like this. Now, is it going to be better than this? Is it going to be worse than this? I mean, I don't know what's going to happen. But if you played this scalp right here and you basically just bought the cross, you know, and obviously it was a little volatile inside there. You know, they basically came all the way back down to your entry, so you had a second chance to buy the cross. And then you just sold when it crossed bearish. I mean, it was basically like a 13% move. If you sold closer to the top, which obviously we sold up here at like 25,000 based on a bunch of, I went through it a million times, but, you know, we sold into that 25,000 pump, which ended up being the top. We got lucky. So we just buy back down here at the 821 cross, try to get a higher high. Maybe we get a lower high. Maybe it rolls over. Maybe it fails right here. But it's worth taking a shot at. Because the likely scenario that I see for Bitcoin, let's just say it does what I tell it to do, like a good little bitch, which it probably will. It comes back down here, let's say to, let's say 21,000. We won't get greedy. I mean, the likely move to the upside. Now, depending how long it takes, obviously these are going to keep coming down towards us. But let's just say roughly we're looking at another 30% to like 40% upside on Bitcoin. Seems likely. Seems very likely to me at this point in time. Now, we're still in this channel. We basically have like a triple bottom and then a retest of the channel. So, you know, we're going to see a lot of resistance along the way. We're going to see pressure at 24K at the top of that channel. But I mean, what is happening right now? Exactly what we've been expecting this whole fucking time. I mean, this is, how long have we had this 5 blue waves drawn on our chart for? I mean, at this point in time, we have had this 5-wave structure drawn on here for literally months, well before, my bad, well before, we were even doing any of this. We were already looking for the 5 waves down because we know the rule. The rule is ABC, 3 waves down, ABC, 3 waves up, and then 1, 2, 3, 4, 5 waves down for an expanded flat, which we were able to identify way in advance. So, I mean, it's easy when you figure out what the market's doing to just watch what it's doing and then identify it. Well, I mean, for us, obviously, with our methods, we basically have hacked whoever is controlling the market right now, whatever ominous power or aliens or Elon Musk or, Max Kaiser, whoever's in charge of crypto, whoever the whale is that's moving all the price action everywhere, or the group of whales or whatever, Sam Bankman-Fried robot, whatever it is. I mean, we see what they're doing, so we're just taking advantage of that. So the next likely move, based on just a ton of confluence, is the completion of this 3 up here to give us the 4. Now we know if it gets too high up here, it starts invalidating our case, and actually it starts looking like an impulse, and we're probably back in a bull run. But we know the key thing that has to happen first, we got to get on top of 200 exponential and simple. So if the 821 crossed into the upside confirming, that's likely where we're headed. And if that's where we're headed, well, that just makes us right about the 4, which, I mean, makes perfect sense, obviously, because that's key, support from right here that we lost. So what happens? We lose our support. We break down. We start to consolidate. We put in a higher low. Start building some various divergences. Obviously we can see them on different time frames, and then push back up, back test what was support as resistance, and then it fails. So what's the psychology of this? Why the hell would the price action fall through this level and then come back up to it? Why? Well, there were some people that were buying support right here. Whales, market makers, exchanges. They were speculating that this was actually the bottom and that we were actually going to bounce from here. So they were buying support the same way we would normally buy support. And then what happens is they're wrong and they get smashed to the downside. And instead of just exiting their positions like a noob does, a crypto bro either hodls or capitulates right away. There's no middle ground. You either never sell anything and never realize any profits because you're in the crypto cult, or you're just horrible and shitty and paper hands Kevin, and you just like sell the moment like anything flips red, or like you smell a fart in the wind, like just anything, and you're just gone out of your position. There's no actual, I shouldn't say no. There's like a tiny little fraction of a percentage of people that have like brains and experience and like true methods that they're trading, especially in crypto. The stock market, there's a nice blend of both. But here, the people that are smart, the market makers, they just move the price back up slowly over time. And then when they get back up here to that support that got lost, that we broke down from, that's resistance, they just sell back into it. So they're like, oh, okay, yeah, I was upside down in my $28,000 position. Michael failure. Went down to like 20K. I didn't exit my position because I'm not a noob. I suck at trading, and obviously, my Bitcoin investment has failed, but I'm not a paper-handed noob. So let's just say, for instance, Michael the failure, is not paper-handed and held on to all his Bitcoin. And then let's just say he gets a blessing, God's gift, an opportunity to exit out of some of his Bitcoin positions at break even. Does he pull some of his liquidity out of Bitcoin and then put it on the sideline like an intelligent person would? Does he sell into the resistance and then think, okay, I love Bitcoin, but I'm not going to be a martyr. Okay, I'm not going to be the one who dies and goes down with the ship. I'm going to do what's smart for myself, for my investors, for the whole space, which is actually I'm going to sell into that pump at break even, and then I'm going to reevaluate. But that's obviously not going to happen because, he's a charlatan cultist. But let's just say it did, or there was someone else out there behind the scenes other than Michael the failure that would be looking to get out of that position. Also, just so happens, that's the descending resistance in yellow. That's the 200 exponential in simple. That's the support term potential resistance. That's the top that we're expecting for the 4. There's a pretty compelling case right now, in my opinion, that we're about to have. Again, we'll go from a pretty modest level, like a 35% pump or so. So obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But let's just say I was going to take a position or add to a position or take a trade or a scalp or whatever, what would I be looking at basically? I would be looking at, this is my target, the 200 exponential, the 200 simple, the Fibonacci, the descending resistance, all that juicy stuff right there. 35% move to the upside. And what would be my invalidation? Well, I mean, if I wanted to just be like a normal human being, not a degenerate, I would put my stop loss 10% down here at 18,773 exactly. Definitely not 75. Which is a 10.37% stop loss. And then I would be looking at 35% move to the upside, obviously, which is our target of 28,400. So that would be 35% upside, 10% downside. That's a 3.4 to 1 risk reward ratio. We're below the 200 exponential and simple, so we're in a bear market. So it needs to be above 3 to 1 risk reward ratio, which it is, 3.43. So that looks like a pretty thick and juicy trade that I may or may not be taking. And, you may or may not want to do whatever you want to do. But seems like a compelling argument. Now, could you make more money trading some random shitcoin or something? Yeah, probably. But, we use Bitcoin. We use Bitcoin. Sounds like a drug. You're like, oh man, I got fucked up on Bitcoin the other night, man. I'm not feeling so hot. I got the shakes. How'd you take it, man? I heard of some weird methods. You don't want to know, bro. It was in the metaverse. Mark Zuckerberg stuck his... Oh, that's enough. That's enough. Anyways. So if and when this trade setup plays out, we're still in a bear market, but it's a 3 to 1 trade setup. So, seems like a good setup to me. Now we're going to see some definite resistance here. Might be a decent take profit. Is the risk reward going to be as good? I don't know. Now, if you wanted to go full degenerate, what you would say is, okay, look, if we lose, either the 821 cross on the daily, which makes sense, or, some of these other key fib levels, we probably want to exit somewhere along the way. So, could you run a super tight stop loss? Could you just enter the position now and not wait for the pullback? There's a lot of options of what you could or couldn't do. For me, though, the responsible thing to do is down here. But, of course, you could improve your risk reward by getting a lower entry or having a super tight stop loss. But, what's the point if you can get stopped out and then it goes in your direction? You're just going to be salty anyway, so... but that seems likely to me. So, I know a lot of people, after you see like a 10 or so % pump over a couple days or whatever, feel like they missed a boat. But, I mean, of course, it's always best to buy the bottom. It's always nice when you get in front of a trade. Obviously, the cup and handle played out real nicely. Obviously, we still have some crypto positions open for now, and probably going to be opening up some more as we go up here. Now, again, I'm going to take profit at the 200 exponential and simple. I'll see how it consolidates. Does it get back on top of them and then off to the races and we're back in a bull market? It is definitely a possibility. It is definitely a possibility. But there's also a possibility the exact situation happens like happened in the NASDAQ and the S&P and the Dow Jones and everything, and Bitcoin's just lagging behind, where it actually gets back above the 200 exponential and simple and then rolls back over, and then we'll see what happens. So in many ways, to me, the Bitcoin price action just sort of looks like the Dow and the S&P and all those did like a month ago. But, we were down here in the middle of nowhere, way down here on the daily, very, very bearish. Everything just looked terrible. And then they rallied up. The only difference is they rallied all the way up. So maybe Bitcoin is just lagging behind by a few weeks and it's getting ready to do the same thing. Or like, I say Bitcoin, but many cryptos in general. And then when we switch out to longer time frame and see, okay, does this like support our case further, or are we getting a bunch of BS from here? Well, here on the weekly, obviously we know the key areas to watch are back tested at 200 simple, back tested at 200 exponential, back tested at 21. So as high as like 26K. We know, again, all the crypto bros, all the whales, all the market makers, all the crypto bros should be doing everything they can to make this a double bottom, getting back up to the heart line of the double bottom, which we basically have like two V's or a W, double bottom. And then if you break through that 24K level, which is obviously the top of the channel, well, what happens? Well, we know. I don't have to even tell you because you already know. Jesus. I'm not drawing it on here because it's just too ridiculous. If we go from the bottom of the range, which is, let's say 19K, it's 19.3. So if we go from the bottom of the range to the top of the range, 19 to 24.3 roughly, that's $5,000 range. So if we break out of 24,000, the measure move would be from the low to the top of the V or the W or whatever. So we're talking about, potentially like 28K, somewhere around there, 29K, which is our target. Everything lining up once again. Now, what happens after that? Does it get rejected and go lower? Does it reclaim this level and go higher? We don't know. But hard buy signal, bunch of green histograms, technically a higher low on the weekly. I mean, you can build a bullish case for crypto. We talked about it in advance. I told you I need to see the 4-hour 821 cross. Then I need to see the daily, 821 cross. And I need to see the 200 exponential and simple flip blue. And then after that, I mean, listen to how nice I am to Bitcoin and crypto. You can be like, well, who is this guy? Oh my gosh, he should start a channel on the internet called something to do with crypto. Instead of Crypto Trend Hater, he should switch his name to something like, I don't know, Crypto Trend Trader. That would be pretty cool. Oh wait, I don't think I ever actually officially switched my name. So I'm just the Crypto Trend Trader that's a hater. But if we're back in a bull market, hey, let's rev it up, bro. Let's do this. But we still got a ways to go. So weekly, monthly, so still looking pretty bad. Monthly, we're just hanging out at the lows, which is never a good thing. Never a good thing. We fell off the table, we're rolling, and we're getting ready to fall off, the next surface. Hopefully not down the stairs. But yeah, so that's a pretty nice breakdown on Bitcoin, I would say, and what I'm looking out for, targets, all that good juicy stuff. If you're just like, oh man, I got to get these updates in real time, and it would just be so much fun to like post GIFs and memes and like chat back and forth with other crypto bros, including the one and only Crypto Trend Trader himself. There's a super exclusive, very, very exclusive. I mean, it's like the VIP of VIPs, small group of just awesome fucking people, one of which I am, that you can join for a contribution one time, and you get access to multiple indicators. If you don't want to do that, that's fine too, but you're missing out, I promise you. The best indicator ever, the TJD Master, the one that you see me use nonstop all the time. And then obviously we have the Jewel Thief and the TDMACD is already free. So go get all the free ones first. And then if you're like, oh man, this is just not enough, I need some more interactions and I want these indicators, you can message me. So man, what a compelling sales pitch. Man, you can tell this guy, he's really selling it. So that's our Bitcoin TA. We know where we're going. We know what we're looking for. Ethereum. So Ethereum had a nice little move up here. Cross 821, back bullish. Obviously, we had the trade setup we have discussed still in play. We very clearly have a potential for that fifth wave up right here and a potential target of, either the trade setup target right here or as high as the 5 up here at like 2,500. So we're looking for that in the next couple weeks. I mean, obviously, I look at the event as sell the news event. But the most important thing, as long as we're holding this ascending support line, as long as the 8 and 21 on the daily are across to the upside, everything looks good for Ethereum still for some continuation. What was this? 11% stop loss, 30% target, just under 3 to 1. The higher end of the range was a little bit closer, 4.5 to 1, 57%. Very close to the 200 exponential and simple. So, what are we expecting out of Bitcoin or hoping or betting on for Bitcoin? Just the same thing that Ethereum already did. I mean, Ethereum fell slightly short right here. Bitcoin basically did nothing while Ethereum ran. Not crazy to think that maybe Ethereum tops out somewhere around here or whatever, and then Bitcoin runs. People take their profits back out of Ethereum and this, sell the news event and put it into Cumrocket or whatever your favorite shitcoin is. Definitely a possibility. So ETH on the daily, we know obviously the target is just slightly higher high. We have the trade setup and everything in play. If we look at the weekly, bounced off the 200 simple, reclaim the 200 exponential, back testing the 21 right now. Getting back above 1854, 1,854 is huge for Ethereum. So another 100 and a couple dollars to the upside would be look really, really nice because it would be on top of 200 exponential and simple. It would be top of the 8 and 21. And on the weekly, stay up there for a couple months. We could see this cross back to the upside. And you don't get a lot of false signals on this. Now, obviously, we had one back in 2018 So it's worth paying attention to. We could get a false signal and then go much, much lower. But typically, you're not going to get a ton on the weekly. But obviously, how much of a move has already happened before the 821 crosses. That's why it's important to step up on the various time frames. And then on the monthly, it just looks like a back test for now. We need to get back above 2175. Looks bad right now. Could look a lot worse. But as long as we're below the 821 and they're bear crossed on the monthly, not good. So total market cap, still in that range. Nothing changing. As long as we're trading in a range on total market cap, that's not bullish at all. It basically just says the same money is just moving around in the space, but there's not really money going in or not really money coming out. That's not good. We do not want to see a consolidation at support because typically we break below it. So this is not good to me. What we want to see happening on this chart is we want to see this market cap back up here at 1.15 trillion, get above the 8 and 21 and both 200s, and then break out. If it breaks out above 1.16 trillion, we start looking at some nice jumps, $100 billion jumps, $500 billion jumps. But we need that to happen. And that also shows that new money is actually coming into the space. I mean, you could be as bullish as you want on anything, any asset. It could be literally anything in the whole world. But when it all comes down to it, it's simple. It's supply and demand. So what signals supply and demand? Well, money flowing into the space. If there's money flowing in, it means there's demand flowing in. And we know the crypto supply is nonstop going up. It's literally going parabolic right now. And that's not a good thing. If I bought into a company stock, let's say, we'll just make up a random name for something that's not even a real stock. Let's say it was I don't know, GameStop. Okay, say I invented a GameStop, and that was my stock. Okay, and maybe you want to invest in it, and there's 100 shares, and I'm oh, that's cool. I'm gonna buy 50 of those shares, and then let's say they decide to come out and issue another 100 shares. That's obviously dilution, and that sucks because now I got screwed because I went from owning half the company with my 50 of 100 shares to owning a quarter of the company with my 50 of 200 shares. And then let's say that same company, GameStop, fake company, obviously not some real trash garbage that's completely fucking people over long term because they're going to lose everything. Let's say this fake stock, we do something else too. I'm oh man, people are getting kind of mad about all this dilution. So I'm just going to create a second kind of stock listing, and everybody that's invested in the stock can have one of these for free just by doing it. So I'm not actually diluting the stock in the company, but I'm basically just printing up other fake stock out of nowhere that has no value, and then I'm dumping it. That fucks people bad, and it's really, really shitty and makes it very hard for the price to go up. Well, that's literally what crypto does every single fucking minute of every single day. So literally, there's a non-stop amount. And you're no, that's not true. There's only 21 million Bitcoins, you fucking noob. Get your fucking facts straight. I hate you. Unsubscribe. Fuck. But I'm going to stick around just in case you say something interesting. But you're a fuck, and I hate you. All right, so now that he's gone, it's non-stop happening. There's literally cryptos popping up every single day. There's non-stop minting of coins or mining of coins or, whatever. The crypto market cap nonstop goes up on its own without anything. And then that increase in supply needs to be balanced out somehow by an increase in demand. Either new people buying more crypto or old people buying more crypto, but somebody needs to buy up all that trash, or else the prices still go down because the supply is non-stop, just getting bigger and bigger and bigger and bigger. So there's a massive fight going on right now between all the trash cryptos that are non-stop, just creating more and more and more, and all the quote-unquote investors in the space, where we need to buy up enough trash that it makes up for the gap in supply and demand so the prices don't go down. Otherwise, the prices will just go down on everything. The supply will just go up. The market cap will literally just bounce around right here and nothing changes. But the values of all your cryptos are going down. Literally, okay, just hypothetically, let's say, and I know I'm probably going too deep on this, but I don't think people understand this, and it's very, very important, which is why crypto is fiat, and people just don't realize it. You know, they're nonstop making new crypto. You can literally clone any crypto you want in like 15 minutes for like $30. Well, not any crypto, but most of them. So every time somebody does that, it creates a new crypto, and then let's say that crypto is a clone of Bitcoin, so there's going to be 21 million of Bit clones, let's say it's called, for instance. And then, well, now there's still the same amount of Bitcoins, but there's all these extra Bit clones. So at first it's not worth anything, but then say, you know, some people buy it goes up to a penny, and then it's $1, and then it's $10. If no new money comes into the space, that money that pumped up that Bitcoin? No, Bitclone. The money that pumped up Bitclone, the money that's going into it is coming out of other cryptos. Could be stable coins, could be Bitcoin, could be Ethereum, could be Cumrocket, any of those. So the market cap is going up because there's new crypto coming into it. But at the same time, the money that pumps up that is coming out of other ones. So the market cap can go sideways or even potentially up right here as the values of everything go down, with the exception of some of these like trash projects or whatever. That's not a healthy environment at all. And the more of these trash projects we have diluting everything, the more it's bad for like all the other projects. Like think about how much Bitcoin and Ethereum would be worth if there was only 20 cryptocurrencies and there was no liquidity soaked up by all these trash fake scam coins. That's why this chart is very important. And on to the next, because we definitely talked about that far longer than I expected. So Bitcoin dominance, we're going to look at both charts here. So we obviously are just testing those lows again. Bitcoin's starting to strengthen up here. Again, there's a vested interest in not letting Bitcoin fall below this if you're a Bitcoin maximalist or maxi pad or whatever, like Michael Saylor. If you're into altcoins, who cares if Bitcoin dominance goes down? It's actually probably good for you. And then here without the stable coins, we can see we're nowhere near the lows right here, implying that actually Bitcoin is maintaining a lot more of its Bitcoin dominance when we factor out the stable coins, which is important. It's definitely a good thing. It means that not as much money is flowing out of Bitcoin into speculative cryptos. Some of the money that's flowing out of Bitcoin is flowing into stable coins as well, which is okay. That's fine. People are de-risking. They're not over speculating on trash. I mean, there's definitely some of that going on, but so we talked about Matic, the potential move up here. If it gets back above the 200s, the more times it bangs its head on the 200s here, more likely it is to go up. So this trade setup starting to look more and more likely. Could potentially get a better entry than this. What we don't want to see is Matic pull back and lose the 821. We don't want to see that happen. But, you know, technically 14% downside, 41% upside. It's like 3-to-1 risk reward ratio. And it seems very likely, now that we're banging our head right here, that we're going to break through it. You don't often consolidate at resistance without breaking through it, or consolidate at support without breaking through it to the downside for this amount of time. Now, anything could happen, obviously. It could just roll over now and go straight to zero. But what were these? Oh, I think these randomly just like showed up on here. I have no idea. I think we saw that last stream and then I never deleted them. But yeah, that's what I'm looking at on Matic BNB. So we talked about this trade setup as it reclaimed the 200 exponential and simple. 821 have crossed back to the upside. It needs to hold the bottom of this channel and stay inside of it. It looks like it's going to break down here right now, but it really needs to hold this level. But that is a 7% stop loss, 26% upside. Again, I'm still really bearish on these markets, but I mean, if the trade setups are there, they're there. Now, could all these trade setups just suddenly fail at the same time? Yeah, oh yeah, 100%. Definitely could all fail. But let's look at it this way. If we take 10 trade setups and we have a 7 to 10% stop loss on each one, let's say this immediately gets stopped out and we had $100 and we put $10 into each of these cryptos and then we get stopped out, we lose 7% of our 10%. So it's 0.7%. It's not even 1% of our whole account. That's why we use risk management. Okay, so now if you went all in and lost 7%, that's 7% of your account, or 20%, that's 20% of your account, not 0.7%, which is why it's so much more important to actually use, you know, not just be like, I'm all in. Adam, same thing, was able to break through first trade setup. It looks like it's getting ready to rev up for the second one here, so looks like it's headed to like 1857. Cosmos, Adam, the whole dealio. Could be, looks kind of toppy right here now. Back testing the 200 exponential. This second one may not play out We'll see. It should have held above that 0.5, but there's a whole cluster of like support and resistance right here. As long as it stays inside the channel, as long as it stays above the 8 and 21 and there's still bull crossed, it looks okay. Really does look like it wants to finish that move. All right, Solana is next. So man, Solana just looks so fucking bad. This has got to be the worst crypto ever. It's like the BitConnect of our generation. It's about to cross 821 bullish, or try to. It needs to hold above 34. Without being mean to Solana, because I know there's people out there that like this. Or they think they're like it, but really they just made money on it, or they're trapped in a position. So they just have to like it by default. But let's just pretend there's people that actually like Solana for some reason. I think backtest to 618 seems likely. 54% upside. Bottom of the channel, somewhere around there. 30-something% upside. Getting above the 786. Likely we take a step back up to the 618. So I'm going to put this on here. You guys know, obviously, I would not trade or invest in Solana because it's trash. I'd take it back. I would trade it. But I'm not taking the setup because it's garbage. Solana, I mean, not the setup. Setup's awesome because I made it. Duh. All right, so 12% stop loss. If we take out the lows right here, not good. And at that point in time, we're probably going down to the new lows. 69% upside. Haha, nice, Elon. So 69 upside, 12% stop loss. At 30.35 is the stop. The target is like 58.94. Call it 60. Front run it though, or overshoot it. We're talking about 5.54 to 1. 70% upside. I mean, there's some potential for Solana. It probably goes to 0, but, and I'm definitely not going to take this trade setup unless I change my mind, but there's something there probably. Cardano, man, I tried so hard to build a bullish case for Cardano. After I heard people talking about it, and I'm not going to lie, I hadn't looked at a chart in a while, so I was like, let me see what this is all about. I can't remember what I saw. Maybe it was like Corn Bureau. I'm sorry, Coin Bureau. And he was talking about like it was like a hedge against Ethereum and how it just had like a massive run up. And I was like, shit, let me check this out. And some other people were talking about it. I mean, what the fuck are people talking about? This looks like trash. It's literally just hanging out at the 382, putting it in lower highs. It looks like it's headed straight to 0. Or no, 0.23. 23 cents. Not 0, 0, 0. 23 cents. 0.23. So I'm not trying to break anybody's Cardano heart, but God, this crypto looks like such trash. Now, if it does, you know, go sideways long enough, eventually, technically, it will have backtested the 200s. So that was everything else. Like Ethereum just skyrocketed to backtest the 200s. Bitcoin had a leg up, leg down, higher low, and then it's on its way potentially to touch the 200s. Cardano is just such trash that it's just going to go sideways and down for so long that eventually the 200s run into it. Oh, man. I know people are probably getting a little butt hurt by my Cardano jokes, so I'll leave it alone. It's not fair, okay? You went all in on Cardano because what Karen told you at the school board meeting. I get it. I get it. It's not seeming so credible. And first off, correction, you weren't all in on Cardano. You went 50-50 on Shiba Inu coin and Cardano. And you're staking it because you earn 8% returns on your Cardano. But unfortunately, you bought at $3 and now it's worth 50 cents. Oh, that's so mean. All right, let me jump in the comments real quick and then we'll keep rolling. What do we got going on? Crypto Go, CW, what's up, man? Smash that like button, broskies. That's right, you better fucking smash that like up. I know somebody out there right now is hearing this and they're like, you'll never know if I hit it or not. I'll know because I have a counter and I want to see it go up because there's 10 people watching right now. Only 9 likes. Oh, we lost somebody. We're even now. Okay, I appreciate everybody. We're good again. We're good. Chased away the Cardano beads. CN says, I agree, a ton of divergences. In regards to ranges, we are exactly at the midpoint of the range on Bitcoin futures. We are exactly at the midpoint of the range on Bitcoin futures. What's up, Ezekiel? Good to see you. Crypto bros unite. That's right, man. They should be. I would unite. If me and like 100 other people on Earth had a bunch of, vested interest in something happening and it was about to like be bad for us, I would be like, hey guys, like, you want to not manipulate some stuff and save our assets? Probably. I mean, it makes sense, right? I don't know what Sam Bankman-Fried charges you when he gives you a loan. I would imagine there's probably some like weird Team America World Police stuff going on there. And if you haven't seen the movie, it's either amazing or terrible. It's somewhere in between, but there's some funny scenes in there. And I think Sam Bankman-Fried's probably getting some of those special handshakes from the crypto bros to bail him out. He's like, you belong to me now. I get my power from the afro. CN says, how does Cardano still have like a $20 billion market cap? Because the supply is massive and everybody just stakes all their Cardano. It's like 70-something% of the Cardano is staked. So there's like a bunch of people that are just getting paid like 8% to just lose like 30% a month. They're making like 8% interest, but Cardano goes down 30% every month. You're like, this is a great deal. I mean, is it though? All right, so on to our commodities over here. We'll keep ripping through here. Try to wrap this one up. It's 1 hour and 20. We're doing good. All right, so gold at the bottom of the range still looks absolutely atrocious. Long time frames look absolutely terrible. There's no bull case that I can make for gold other than we're at support. So that's good. The problem is we have been down to this support way, way too many times to where it's just not good anymore. So the back test is the 236 at like 1759. The next step to the downside, if we lose the range, is 1595. So there's very, very little upside, in my opinion, until we reclaim the 236. I can't even begin to get bullish on gold because it seems more likely we're headed down here to the 382. Very clearly in a bear market on the daily. We are at support on the weekly, at the 200 exponential and, essentially 200 simple. And we see we've come down to that same level a bunch of times. Now we have more confluence because the 200s are there. So we don't want to get like overly bearish, but we see momentum is rolling back over here. So we'll see what happens. The first important thing to do on the Bitcoin or on the gold weekly is to reclaim the 8. So we need to get back above 1750. Then after that, we got to get back above the 21, which, if we started moving up there, it would probably be that 1760 level. And then at that point in time, we can cross the 821 back to the upside. We can at least make another go at gold. If we don't do that, if we look at the monthly, we've talked about this a million times. This is literally the setup. I was like, when we topped out right here and started consolidating, I immediately look at the previous high and say, okay, what happened last time? What did it look like? Let's see, how would it look if the same fucking thing happened again? And what would that look like on the chart? And then what happened? Lo and behold, the exact same thing. And now it looks even more exactly the same. And then we broke down. I warned for months about that 821 cross happening, the bear cross happening. And here it is. As soon as it happened, we take a leg down. We're at the last line of defense right here. And the last time this happened, it doesn't have to happen again, but that was in 2013. And gold just fucking melted down in a monthly bear trend that lasted for years and destroyed like 30-40% of its value. And I know everybody's like, but the central banks are buying gold and the Russia and the new BRICS currency and the blah 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 blah. It's like the teacher talking from Charlie Brown. These fucking stupid ass people. Who cares? I don't care about any of that shit. Because they've been saying that shit the whole time. They've been giving a billion bullish cases for gold and silver the whole time. And it's melting down. I mean, it's at support. So, technically, it should hold here. I don't know, though. I mean, hard sell signal on the monthly. Just got the cross. Right here, we didn't quite cross it. In real time, we crossed it up, and then it got rejected. But, once it prints and reprints, it essentially is a rejection off that. Here we get the bull cross, then the bear cross. That is not good. And then we have the back test right here. Basically, the histogram is back testing the blue slope line. Gets rejected and then rolls over. Here, the exact same thing. We backtest the slope line rather. I might say 200, but I meant the slope. And then it rolls over. This is not good. And, you know, that basic move, essentially, that basic move, you know, would potentially take us down to the 618 of the bull run right here. You know, this key area like that 1350 level and the 200s, depending when we got there. Now, I'm not saying it has to happen, but there's a lot of stuff pointing towards $1,350 gold. Sounds crazy, but I mean, I don't know. I'm just saying, if all of a sudden, and only the true OGs will get this, and by OGs, I mean people that have watched every stream for roughly 1 month. Because at one point in time, I mentioned Elon's secret plan is the space tractor beam and pulling the gold asteroid out of the sky and landing it on Michael Saylor as like the ultimate troll. And that would honestly potentially increase the gold supply massively. And that could be the catalyst for gold to break down to 1350. I wouldn't count it out. I would not count it out yet. And also, I want to give a shout out to the additional people that actually liked after I said that. So I appreciate it. All right, so the silver chart, XAG looks terrible. Bouncing that key fib. So this is important. Let's do the zoom out on silver and take a look here. Obviously, it looks like trash. But when we zoom out, we still have the gigantic cup and handle pattern. And obviously, if you didn't believe in cup and handle patterns now, you probably do after seeing what happened with Bitcoin and how beautifully that was. So that being said, silver backtesting the monthly 200 exponential and simple, breaking down out of the pattern, hitting the measure move. This is basically, if you just imagine this right here, and just picture, this was our recent gold run up. On gold, it got back to the previous high, you know, went slightly higher. And then when it broke down from that pattern, silver has already broken down through that. Gold is basically still in its channel. If gold breaks down out of the channel, the back test would be of the consolidation range. So this is the equivalent level of 1350 on silver. It's like 1,350 for gold is like 1890 for silver. So silver has literally already had the bear move that we're likely expecting for gold. So what does that mean? Maybe gold doesn't break down and then silver just is trash and then that's it and then they both just rally? I don't know. Maybe gold breaks down and silver breaks to new lows and just looks like the worst chart ever. And I mean, I only say that because we have a high and then a low and then a lower high. So if silver puts in a lower low right here, it's basically garbage. They basically have come out and they're like, hey, we figured out how to make silver out of dirt. So it's now worthless garbage because anybody can just, you know, take some dirt and sprinkle baking soda on it and it turns into silver or like whatever. I don't know. I don't know how they do it, but you know, whatever it is, you got to spit on it too, shine some light at it and like spin around in a circle 3 times. Whatever it is, there's some stuff pointing towards silver melting down. Now, does it bounce this level and get a back test all the way up here to like 22? It's possible. But just remember, all the people that were bullish on silver, look, there's a whole cult of silver people that are like, they're draining the COMEX and silver's going to $50 and $1,000 and like just, oh my God, silver just, oh. I mean, okay, if they're draining the COMEX, they were draining the COMEX when silver was at $30 and now they're draining it at 18. I mean, why were they draining it at 30 and why is the price melting down? Just be careful. The people aren't trying to sell you some fake narrative. I mean, if I was invested in pot stocks or silver, like, I mean, obviously I own a bunch of silver and gold and all that stuff, but if I was like invested, like speculating on pot stocks and silver right now, I would be furious at their performance. So I don't know. I mean, I guess you have to get more and more extreme. You have to make like $1,000 silver videos to keep people interested after it's like such a trash asset. But I mean, one day it'll have its day. And again, I'll be nice to it eventually. I do actually like silver. Like fundamentally, it should do well, but you know, I guess it's the manipulation. Gold silver ratio. So I had a little pullback, but you know, in my opinion, this was a key resistance. This was a key resistance. So it's going to take some time to probably chop through this level. But once it does, I mean, you know, we're literally like, we got up to where we were 2 candles away from all-time highs. You know, this was during obviously the Rona craziness. But it was literally 2 weekly candles, and this shot through the roof. It went from 96 to 128. So is that about to happen again? Is this about to go fucking parabolic? I mean, I don't know. It's either really good for silver or really good for gold or really shitty for silver if it does. GSG commodity index with some extra weight on energies. It's back testing the 200 exponential and simple, holding right now. You could look at this as a buying opportunity, you know, buying support, basically buying the 200s. It's basically in a trading range, you know, with a target of like 23.36. It's not a very big percentage wise move, but you know, it would look like a genius entry if it does break out to the upside. So you could probably get at least a 2-to-1 risk reward ratio on this. You know, if we break down to new lows, F it, we'll jump back out. If not, headed back up here to the top again, possibly higher. There's definitely some potential here. You know, it's building a little bit of momentum, looking like it's trying to bottom. Again, if the dollar keeps being weak, commodities probably do okay. FCG, First Natural Gas ETF, at resistance again. Obviously, pretty powerful move. Maintaining the 821 bull cross is very, very important right here. Still above the 200s. I mean, in my opinion, probably ends up at higher highs before long. This could go either way. We'll see what happens right here. The important thing is what happens in the short term now. Holding above this support level is very key. This looks like constructive price action. You know, we get a move up, back test, find key support. We get a move up to a new high, back test, find key support. So likely what happens next? Probably another move up. And at that point in time, we're probably threatening all-time highs, maybe going to new all-time highs. So nat gas looks pretty damn bullish, honestly. CCJ. So Cameco and uranium. CCJ looks really strong still. And to tell you the truth, if we start consolidating above highs or break out to new all-time highs, I will probably re-enter at least a portion of the position and buy into strength. The problem is everything else looks far worse. URA looks very toppy here, like it's about to roll over. Obviously, this was our target up here at resistance. Seems very likely. UUU, again, just a series of lower highs and lower lows, at least back on top of the 200 exponential and simple. UROY, below the 200 exponential and simple, trying to save those levels, but again, lower highs and lower lows. You know, at descending resistance. It looks pretty toppy right now based on where we're at. Pot stocks, CGC, looking more bullish than most. It has managed to save the 821 cross for now. If it does, eventually, $6 on this thing. You know, it's almost 100%. Tilray looks very, very weak. Below the 8 and 21 at the lows. Not what you want to see. It's typically Tilray outperforms on these like quick little counter trend rallies. Looks really weak right now. Looks really weak right now. If it gets back above like 363, then we're talking. You know, again, that would be like 570 target on Tilray. But we're still a ways away from that, to tell you the truth. ACB looks decent. I mean, it still looks pretty weak. It's hanging out at the lows, but it's at least on top of the 821. You know, if it comes back up here and gets above like a $1.90, 255 is going to be the 200 exponential and simple, and that gap fill. You know, it's like a buck up from here, so good like 66%. Sundial showing a little more strength. It's still below the 8 and 21. It looks like it's trying to get picked up right here. And again, target around like 390 to like 450, depending on the fib or the 200s. And then Hexo, very weak, hanging out here at the lows. Had a pretty strong rejection. It tried real hard to get up above there and got rejected. It probably makes a couple more tries. It looks like it's about to get the bull cross, about to exit the bearish control zone. It is putting in higher lows. It does have momentum in its favor. I mean, Hexo obviously has been rough lately, but it looks like it wants to come up here like 26. If it gets up to the 200s, I mean, it could get wild. 37, 48. You know, the 200 exponentials all the way up here at like 77 cents. It's like almost a 4x. Does it happen? Probably not. It probably goes straight to zero. You guys already know. Now, it's important to note here, we talk about this all the time, and I want to point it out on this chart specifically. Here, the 200 simple crossed above the 200 exponential, and we went into the long bear market. Here, the 200 simple crossed below the 200 exponential, telling us, hey, we're running out of momentum. We're likely still going to have another drive and put in new lows, but might be getting bottomy, or at least a temporary, shorter term bottom. Possibly enough to give us a reaction rally. So again, are we talking about, you know, a very key level would be like 47 cents? After that, we're talking about like 78 cents. And the beauty is on this one, now keep in mind, this is garbage and it's definitely going to zero. Probably like at market open. Could even go to zero in pre-market hours. So this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But you don't even have to research this because I'm telling you it's going to zero. But let's just say hypothetically, if you were going to do what I'm planning on doing, you know, we could like say, hey, if it goes to new lows, I'll get out and then reevaluate. You know, it looks like, man, it's so hard to tighten this up. When assets melt down a lot, it's very hard to draw on them when they go to zero. So, you know, that potentially gives us targets of there we go. So 131% upside with a 47-cent target, and that's a 12% stop loss. So it's like 10.99 to 1 risk reward ratio. So like 11 to 1. Pretty good. And then if we hit the 200 exponential, which will never happen because this is obviously going to zero, that's 254%. 21.33 to 1 risk reward ratio. So 12% stop loss, 254% upside. So 2.5 your money or lose 12%. It's not a bad risk reward ratio, 21x. And that is a target of roughly like 73 cents, call it 75, round it up to 80. If we get to 80, we might go to 100. I mean, who knows? $1, I should say. Probably never gets there. But there's a compelling argument and a decent trade setup. You know, if anybody does take such trade setup or something similar, you know, good luck to you. But obviously not financial advice. All right, I think we did it. I think we made it to the end. We don't need to look at like longer time frames on pot stocks or anything because they all just look like they're going to zero. So, and again, if we did get this crazy rally, like 254% or whatever, I would 100% liquidate my position and assume that the pot stocks will just right afterwards go straight to zero. You know, and if you're looking for, hey, this sounds a little crazy, 254%, this thing looks like it's about to go bankrupt, I totally agree. And this is probably what was happening here in real time. You know, when this melted down here, the 200 simple crossed below the 200 exponential, and then here the 200 exponential crosses back above. Come back up. Actually get back above the 200 exponential and simple. And then it completely melts down again. So we've seen moves like this happen where, you know, this is like the Cardano of consolidations. It just goes sideways so long that it hits the moving averages. But the truth is, and you know, obviously you're never going to pick the bottom or the top, but that was about like a 230% rally. Just to back test the 200 exponential and simple was 100% back here. The overall rally was 640%. So you're like, oh, it'll never rally 250% and then go to new lows. You're a moron. Well, I wouldn't count it out. So yeah, I think that's going to do it. Hopefully everybody enjoyed the stream today. I appreciate everybody tuning in. Obviously enjoy them and enjoy doing them for all of the group members out there and all of the silent members of the community. Let me jump over here. CN says, how does Cardano? CN says, geez, that's tough. Yeah. Okay, so yeah, we'll wrap it up there. Appreciate everybody tuning in today. It is Sunday night at 9:41 p.m. Eastern Standard Time on 9/11/2022. And of course, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here. Have a good night, CN. Everybody have a great night. Appreciate each and every one of you. I will see all the group members throughout the week. Hopefully everybody had a nice weekend. I know I did. Had a, got away from the charts a little bit. Had a little bit of fun. You might be able to tell by my raspy voice. Maybe had a little too much fun. But that being said, we're going to wrap it up there. I will see everybody in the group. And I will see you all on Wednesday for our 8 p.m. Eastern Standard Time stream. And then again on Friday for our 11 a.m. Eastern Standard Time stream. But that's it for today. Crypto Trend Trader. And I'm getting that.